Can you hear me now?
Yeah.
Welcome aboard.
Yo, what's up? Welcome aboard to the Stangum End of Day podcast. April 4th, 2023. Stangum and John in the house. What about it, John?
Another day, another day. I mean,
Another day in the neighborhood.
yes, sir. Yes, sir.
Another day in the neighborhood. Tell you
And
what,
kind of,
I don't I don't know. I, I'm almost bored, John. I'm almost bored. I've been bored since January. Market doing exactly what we say. You
still
know, when it does what you expect, trading's boring.
yeah,
Trading is absolutely boring. But let's get in the charts and see what today held.
chart done. It's really finding the time to trade it, and you got to stick with that time. Let's go into these charts, though. Let's see what we see or what is destined to be. Let's see. Boom. Let's start with our favorite, our yearly. It goes the yearly. And kind of on the recap, we kind of did the same thing to pull back to this halfback right here, which is kind of after sweeping this high right here. Did we make it to these high? Yeah, we swept this high too. And we got close to this high. Yeah, we always got close to that high.
All in the wicks, pretty much.
Yeah. And I mean, if you look at it, this is no halfback touch, no halfback touch, no halfback touch yet. And right here,
Suspect.
and right here we have the high of previous month. So this is March's high right here. Now I don't believe that they're just gonna let this drop. I do believe that they're setting up for a play into Friday, possibly a play.
Oh yeah, definitely. We got an
we got
April
two
Fool's
scenarios
play.
today.
We got an April Fool's play coming up.
Yeah, we failed kind of this high right here, so I kind of see we're gonna pull back up here, kind of this kind of move like this. Do we sell off to this halfback at 10? I think I was calling it all day 10. We got close to it, right? We got really, really close to it. Let's see where our halfback is at. It'll be the first halfback we test. Today was the first 2 hour we've actually failed. Look at that, still right there, right there. So 10, around 10, 10-ish. So we haven't tested yet. So, this high is going to be very important, which is 39, 41.39, which is the high from prior day that we were kind of looking at it when it popped up and then came back down, that we couldn't get above it. So it looked like we were failing that high on Monday. It is Monday, yeah, on Monday. And at the end of the day, they ripped it up to the highs and they wanted more highs. They wanted that 42, get above that 42. They got it and they finally hit the high. Remember that high 59 I was talking about? It got hit. And today at the open, everybody's above that price. So everybody's at these highs. So all the markets, even London's, right? London's market shot up there. Well, not really. Yeah. London's market did get up here. They all up here. The only market
Yeah,
that didn't
London made the high.
yeah, the only market that didn't get these highs is Asia. So can we possibly have a move back up to these highs? We could possibly have it. We could be trading at these highs for a little bit into the end of the week and possibly release it to that halfback. The reason I didn't hit that halfback is kind of the reason they didn't hit that high on the previous day. So we still could come back up and hit and go back up a price because maybe Asia wants the same price.
Maybe.
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 Right now, what they did to close was kind of interesting because let's go on a small time frame and then we'll see it. Let's go on a 30 minutes. Let's just do a 30-minute. This is the 30-minute. And you see at right here how they just sold it through. It's just straight sells right here. Halfback tested, no halfback tested. And look where it's at. And right here, we tested our first halfback and we made a low and we came back up. So the fact that I think is suspect that we get to this into London's open possibly, or Asia. We're not that far from. Exactly. High, low, halfback. Now, the problem with this being sold is the fact that when London opens,
But you also have the low high
yeah,
halfback, which gives us this move to here.
yeah.
So what's it looking like right now? Because it probably needs to
it
come
should
fix
have broke
itself
down
with
from here.
Stingham line.
It should have broke down from this low right here. It should have been high, low, and then broke down right here. But look, now we're above it. And the fact that we didn't test this high from the low side and we didn't do any type of bounce on it. It just went right through it.
Pretty much straight sell off since
Yeah.
6 a.m.
Yeah, and we left
my time.
ranges out of touch up here for New York. I think price probably returned back up here. It just the way they sold it, there was no real reason besides profit to take it.
Taking profit. Why not?
So the key to be thinking that if they're selling, what was the cause behind it besides profit taking?
Yeah, I mean, it's never just a sell off. Maybe once every couple months.
Now let's look at London's close right here. London's close. We just swept the bottom side, and we're not continuing to the downside, right? And then let's look at 1300 candle. And remember, if it's just profit taking, they're literally taking profit. This wasn't that much of a drop if we really think about it.
Nope.
Look at the close.
Not the way they projected it.
Look at the close from yesterday. Let's say that they closed up here because let's say the gap was up here somewhere. So I thought it was going to hold the gap. It ain't hold the gap. The gap's around 39, right? The same high as yesterday. Oh, actually, right here, the gap is up here. I'm sorry. Wrong day. The gap is right here at 51 or 50. It's actually down here somewhere. Yeah, right here. It's around this price, 52-ish, right? We failed there. And where we really come down to, we really didn't make that much of a low. We're down, what, 30-something points? We didn't even make the full range. So, yeah, we could possibly see the full range being made. So let's say we pop up, right, and London sells it. Now, the issue with London selling up here is London's close. Once we get above London's close, it's going to be hard for them to sell it.
Yep.
They could still sell it, but if they don't, we could possibly do this until London's open, all the way back up there, and then it sells off again. Now, when it sells off again, we could possibly go through at London's close because it could possibly be New York selling it. And
New York already gave them the green light because New York sold it from up there. So, I mean,
but
it's definitely a possibility.
Let's say the possibility that Asia wants the same price. They could still let this run up. Asia buys it, London buys it, and they get back in this range, and then they start selling.
But do they have to have that price?
Not necessarily.
May not, because everybody already got the same price.
Yeah. I mean, is it going to be a continuation sell-off? I doubt it. I doubt it because there's a holiday coming, and they usually pull funny things around holidays.
Yep.
And realistically, we're still trending upward, and this could literally be an indication for a dip buy.
And this is an April Fool's holiday on top of that.
Yeah, let's do a dip buy scenario.
So who they going to be laughing at? I guarantee you they got something up their sleeve.
Look at that, Dobbs. Oh my God. Low. This is the previous week. Previous month. Halfback.
Yep.
This is the high. That became the low, and this is halfback. That is dangerous.
Should do that.
Yeah.
Should. We use the word should lightly.
Now, we still have gaps to address, and possibly the fact that we did this is getting a lot of people to be heavy on puts. Now, the scenario that is puts, we have half a day on Friday. We got the jobs report coming out, and we got a holiday. That's all in the mix. So can they go back up to the highs? Absolutely. They could. Why? Because I believe that possibly today, even looking at this candle at the close, is saying that they're probably very heavy short on this, on puts.
All right. Before you move anything, that third peak right there that I had marked right here, they have to get above this level.
Yeah, but that's
Go
where it's
long.
going there.
They have to get above that level because that gives us one. This is the look back. Remember when I was talking about in chat today, a 3-day look back. We got 3 peaks looking back. So we do the reverse scenario. That means we need to be above this peak for the long. If we cannot get above there, it's no bueno. Then we have a high, low, halfback failure going to the downside. High, low, halfback,
Yeah,
and sweep.
and the scenarios to go right here, to go that 410. So maybe we come up here, hit here.
Bless you, John.
Thank you. Allergies, man, are killing me.
I'm telling you, we got them down here today too. I mean, it's got up to 80 today down here.
Yeah, it's 76 up here. It's crazy.
Nice warm day. Had to turn the air on. Had the windows open for a little bit, and then had to turn the air on.
So right now we're looking at this 50% retracement back here, which is 40. And the reason that I didn't do this earlier, if you really think about it, is that on smaller time frames, it's gonna flip. That's why I traded on a 15-minute. Before it was on a 30-minute flip. That's why I said into 230 maybe the flip, because and I was looking at this candle to hold, but realistically, if this would have held, we would definitely been up at these highs tomorrow. That would have been 100% because that would have been our halfback would have been up here somewhere. Well, it's still the same halfback, but I think the price would have been up here already, and then possibly we'd probably be holding here once we got above here. And the fact that London's close would have been up here higher, then they would have done the same scenario down here, up here in time, if London's close was higher.
Right. And what I see here, we got a price gap right in here. We got orders that did not get picked up.
Yeah, because the way
right in here.
Down.
Yep.
You got all this right here too. This whole price.
Yeah, there's some more up there.
See how price went up.
You
right
got it here and here. Well, that's what I just marked. Yeah, here.
So right now the scenario is still up, and if you look at it on a bigger time frame, we only tested Stangam line here, and we almost did a full range. But if you look at like how far up in range we go or up and down before we return, it's almost the same range. So we pop up from here to here. From last time we hit, we did 40.85, and we went up 50 points, and then we finally started pulling back after 50 points. This is a drop of 55 down to 2016, about 40 points. About 40 points down here. Yeah, about 40 points. So we got very close to the same scenario as this. And I mean, this is bullish, and this trend is actually bullish. So 40 points down, it's possibly going to pull right back up to here, which is already doing it as we speak. You get above 11 o'clock, the scenario is that we're going to go sweep a higher high. And if you look at the 2 hour, we're probably going to sweep right here, and that makes sense right there.
Yep.
Now, the fact that we sweep up there, this is the problem with this saying that we're going to 10 because of London's open. If London opens, they might not be able to sell below London's close. It might just stop there, and then New York take it up.
I think they can go past it about 10 points. I have seen them go past it by 10.
We could see that scenario. I mean,
so
we could.
Does that get us there if they go past 10?
What's the price of London's close right now? What we say it was?
I thought it was 20 something.
Right here. So their closed at 30-ish, which we're right at
it 30
on a 15-minute. I mean, the high is
see what 30. It was on the 30. 41.2575 on the 30-minute. 25.75.
Yeah, so it's right up here then.
So can we go down? Hit 15-ish? Yeah, it's possible.
We still got this halfback right here as an account.
That puts us close to the bottom. So
and
we can do a sweep on the bottom with 15. They can.
But now we're like at the same price. So if London opens at their close, are they going to sell it? That's the problem too.
No, they're not going to sell it. Well, the only thing they would sell it is because New York already sold it. So that could be the green light for them.
Yeah, because this sell-off right here happened.
Because they're already in it. They made the high. London already in. They in it.
Yeah, they already sold all this.
They in it. They made the high.
Sold out their range. New York sold out their range completely.
So can we? Yeah, it can, but
we got the scenario of possibly getting back.
It's a possibility. Yeah,
we got the possible scenario of Asia getting to these highs, which is 10 points, right?
Yeah.
And then midnight selling it off. So we got that possibility going up there, right? We go up. We're gonna sell off from there, and then come back to London's open, London's close, and then this is the deciding factor.
Right.
If they don't sell it, it's possible that we're gonna go back up to these highs.
And it's probably going to be the half back of this candle right here.
Okay.
That's going to be our deciding factor. So whether we go up, or whether we go down.
And that could be the scenario for it. And I bet you if we do the range, well, the range was tight at the end of the day. See, the range has been extremely tight for London's close, which is a scenario it's really kind of putting it on New York to see what they do. Even if we do today's London's close range, it's putting us in a situation where they don't know what to do until these reports come out. But right now, let's look at the range as what it is, because
it kind of got a double bottom down there, so they're going to move away.
Let's see, we got a high. I remember we set this low early, so look, we didn't even break the low, and we're above halfback already. Mm-hmm. So let's say we holding halfback right now. What's the possibility we're going to this halfback? That's literally key right there.
Mm-hmm. Well, it held 50. It should go to 50.
And
so that's the possibility.
And then look how it plays into play that if we go up to that high, right? Say we don't even pull back down that way, right? And we pull half back of the range, right? We do this high. I don't know. We'll probably do that high. That's probably what we're going to end up doing. We're probably pulling up to this high.
Yeah.
Pulling right back down here. And then they can't sell it. And then it bursts up. They'll sound like this. Now, if New York closes right here, I mean, London closes around here, this is dangerous. Because then you're looking at a possible move back up. As Asia won't sell towards them, they'll move away from it if we close. See, like Asia's opening, and they're going to be above London's close. This could possibly keep on moving up. Because they want to sell the highs because they know that London will buy the lows. And then vice versa. They'll sell it up here. And then into London's open, it'll come down here and they can't sell it. And then they know that it'll take it up.
All right. What's Sunday's open price? That's key as well. I need to mark that one. Sunday's open price.
Low already. We're at the same price too.
Okay.
Yeah, we're at 32.
So that's key.
We get above there and we start trading above 32.
Oh, we headed for the highs if we get above Sunday open.
And this, how it looks, we're still in an upward trend on the yearly. So how this looks, this could be an opportunity for people saying, hey, this is a dip buy. But the fact that we didn't touch this 41.10 is kind of suspect.
Well, it got close. It didn't have to touch it.
Well, I mean, every other time it touches it.
Has it? I thought a bunch of halfbacks it ain't touched.
Nah, it's got all these that haven't been touched on the way.
That's what I'm saying, but at least it come close on that one.
It's kind of dangerous playing. That's why I keep saying that on the highs, it's kind of dangerous. But look, this halfback was never touched, and then it came back all the way down here. But after every move up, it hit every halfback. Look, hit. This one got hit.
Yeah.
So, I mean, we had a red day, and then we had another red day, and then we hit. So we're possibly looking at this scenario right here. We're above the halfback. We made a high. This is the high that didn't make no sense, right? We traded above it. The next day we traded back into it, but here maybe we get a gap down like this. Maybe it plays out just the same way.
Well, don't we think this might be the shoulder right here? And this is our head?
Yeah, it's going to be a head.
Coming up?
Yeah, but it still needs to pull. It needs to correct itself a little. It needs more buyers, so it can't just continue to go up. 1, 2, 3, and it's got like 3 gaps underneath. Today was like was going to be the fourth or fifth gap, like the fourth or fifth gap today when New York opened.
But it is earnings.
And it is. We are moving into earnings season, and I think that's the key that they're gonna ramp this up into earnings, and it could possibly just continue to go and then start selling off. Remember, I think as soon as earnings starts coming, and as May comes approaches, we're probably gonna come down and take out all the. We're gonna take all this stuff out instantly.
Yeah, I still think 43.33. I'm still sticking to it. Still calling it to the upside, 43.33 before we actually do the
chart
big
is still
sell off.
staying long. This is still long.
But they could just keep going. We may have seen the bottom. Maybe everything's priced in already. Maybe they're that far ahead that they're ahead of the game.
Nah, because earnings is our projected earnings is negative right now, so it's lower than 35 right now. They're thinking 33 or 32 based on earnings, and that's the problem. That based on earnings per share, the market is way overpriced right now. Is it fair price? Absolutely not. Fair price.
So this halfback right here, is this the last halfback that ain't been touched?
Well, that's the projected halfback.
Down signed? Yeah, but that halfback ain't been touched.
Well, that's the projected halfback of the.
That one ain't been touched. That one ain't been touched. The rest of them's been touched.
Yeah, that's the problem. But they know that you're showing this and it's at the highs. That's the problem with it. So when they know that it's at the highs, we could still have. Look at all the times we were at the highs. Look at
and that's what I was getting ready to say. Price don't have to make sense because we have options. They're not going to pay options. They're going to move price away from. That's why options lose 80% of the time because they know where everybody's at.
Yeah, like a lot of people were like, "Oh, it's going down here," and look what they end up doing. They end up making higher highs, and boom! Yep. Oh my God, what happened?
Oh, okay, I'm gonna go long.
And look, none of this makes sense. This is a sell here, and then right here is a buy. Right here is a sell. We're below halfback, below his high. Sell. We should be going down here. Never went.
No.
Same
back and forth, yanking and jerking,
and this could easily become that right there. I mean, we're below the high though. That's the only thing that I see. That we're below this high right here. If we come back up here, and like I said, if we get above 42, forget about this being a sell. And the way price is projected right now, can we get down there? Yes, we could.
We could come down and test
better. It'll be better. Yeah, I don't think we're going down there.
Well, I'm just saying they could. I mean, I ain't gonna say ain't.
The reason I say it ain't coming down there is because that's the situation they had, that it couldn't really have a buy date above that price.
But look what they're doing. Look what they're doing. They're creating that awesome. Now we're starting to make lower highs. So we're getting ready to make the little crescendo.
Nah, it ain't going back in that thing. That thing just broke out, Dobbs.
You think?
Yeah, it broke out. They're making it look like a breakout to get enough buyers in it.
But is it a breakout?
Huh?
But is it a true breakout?
No, it's not a true breakout. They're breaking it out because of what the Feds are doing. Until the Feds pivot, this thing will sell. It's got to sell until the pivot. It's not going to break out right now, but the possibility of making this run right here, look.
Squeeze out just a little bit more because I need to see the last high and the last low that ain't been violated.
High right here, I got to get rocked.
Right here.
And for it to get up there, like, let's take a scenario. How much time did we spend between these two zones? Like from this high?
But it don't have to get above right here, though. That's what I'm saying. Don't have to.
I think it'll get above. I think it'll go 50% from here. Right here. This is probably the price is going to right here. See how that adds up perfectly where I put that circle?
Yeah.
Because of the fact that, so look, if you look at this scenario right here, this area right here. So let's take away all this stuff, right? Let's just leave one on here from that candle. All right, now let's leave it like that, exactly from that candle. Look at all the time we spent up here. Let's take this box right here, right? This is a lot of orders, right? Look how little it is up here. And the low, this is what, 40.82. If we get under 40.82, this is going to tank. But right now, how it looks is that this area right here has not been traded like that equally. This area is going to fill in. Now we could go back and forth right here, but I think like we might have a pullback there, but I think we hold this halfback. I think it's just going to rip
So how high you think we're going?
up there. I think we're going all the way to that high because
The
of
45?
Yeah, we're going up there, and I think they're just going to squeeze it. No, not for this area right here. It's going to hit at least that area right here, which matches up with taking out that high.
Which
And
is
the only reason I say that is because it'll take out this high. And that's not really that far. It's not really that far. But look at all these orders down here. This is starting to become very heavy down here to a point where, what is this? 3 months? This is from October. This is not coming down from here unless they have a severe, like some kind of, we're going to war. We're going into some kind of like another like a legit financial crisis, like big bank fail. You know what I mean?
so everything's over. Everything's good.
No, that's where they're gonna send it so they could squeeze all the sellers out. Remember, this is the high of the year. If you take 6 months back, right? Even if they sold all this and took like as many contracts as they did down here, or the 6 month period, they're already done. They squeezed all the sellers out, right? Now, if they project it up here, everybody's going to be going long into I think right now. If anyone's shorting right now, they're going to squeeze them out as they break these highs. Because if they're selling into a 6 month contract right here, and they're like, oh, I'm selling, they're going to squeeze them out. And it's a lot of puts that are actually there that are saying that the market is going to tank. And just think of the scenario. Banks are crashing, right? Oh, bank run, right? And look at the market go up. What they want is the Feds to pivot. And they know that if they get price up and the Feds pivot, then they're allowed to sell it. They're looking to sell this very heavy down. And I think this is going to sell off very epically down. Like it's going to literally go like that. It'll go down and it'll possibly go right through this halfback and then hit that low of that candle right here, this low. From that low, it's going to bounce. And if you think about it, that's only like 300, that's like 500 points. And it's going to bounce, do 50%, and then it's going to be a sell. The problem with this buy and this sell is that this is going to be this is probably going to be like 2 days. 2 to 3 days they can make this, which we haven't had those sell-offs.
No, them days have been long gone.
But then when it hits this low, it's going to bounce here.
But it could be from them end of day options. That could be why they implemented that.
I think they did that to support the market more, but is also, think about it, they make more money.
Yeah.
Everything on the news is so negative on the market, but it's negative, like the market hasn't already weighed in that. Like, oh yeah, the banks are failing. Well, they thought about that already. Interest rates are going up. Who do they affect first? The banks. Lending. They lend themselves magical money and then they got to pay back. Yeah, but the problem is that when they lend themselves like, oh, IOUs, right? $100 million, right? And then you owe me $100 million because that's how they do it, right?
Yep.
When they raise interest rates, they have to pay that, because it's on their balance sheet.
They had to pay the interest.
Yes, because it's on their balance
the interest.
Sheet. They're not borrowing the money, and the money's magically there. It's not really magically there. It's literally they borrow from the Feds and then they borrow to each other. So it's not their money. They're just lending it out, but then they have to pay interest on it. Yep. So as interest gets paid, they're losing on the interest. And guess what they're paying with? They're paying with people that deposit their money in their banks.
Mm-hmm.
And that's why they're like, we have no money, because they never had money to start with. A bank doesn't have money. The money that they have is to start a bank. They don't have money for anything else. They rely on paying interest for money they borrow from federal government. When there's no interest, they're investing in everything. They're making money.
Yep.
If money is not theirs. And then the money that they have deposited in there is what they use to pay back the interest. And that's when people lose money, because those people are like, yo, I'm going to take some money out. And they're like, yo, we can't
Oh, we got to limit you to only take 2,000 out.
Exactly. And that's the problem that those banks are getting, because everybody's like, well, like I'm going to take money out of the bank, because people panic. And rich people say, hey, I got to move money from, realistically, what they did was, I'm moving money from the bank, right? And I'm going to put it into treasuries because they're safer. There's no return on any 401ks this year, regardless how everything looks, that the market really isn't down. You go back 2 years, we're still negative.
Yep.
You go back 2 years, we're negative on investment.
Absolutely. That's why I think the 401k is the
It's
biggest
garbage.
scam ever in my lifetime.
Look, you go back 2 years, it's still negative, but they're projecting, like, they won't give you a projection. Look, this is December of what? Of 2020. So if you invested for 2020 to 2021, right? Look, we're literally a halfback of that. So all this investment all the way up here,
You
from
lost
here
half of it.
up here, you lost. Not
Yep.
just that, you lost the downside. So
Yep.
you lost 100% of your investment, because you're
Yep.
losing from up here.
From there on.
From
Yeah.
there you're losing, and then
You
you're
lost
losing on the
that
way
half.
down.
Yeah. And then you lost on everything you put in from there forward.
Exactly, and that's what they don't tell people, that look, what you should be doing is reducing your investment here, right? Taking out a loan up at the highs,
Yes.
and then
Pay yourself. At least pay yourself
and
interest.
then move to bonds or treasuries and start buying treasuries as it goes up. I'm up 9% on my 401k.
I've told a lot of people at work to do that, but I don't know
They
if they
don't listen. They're
listened.
hard at it. They're like, "Who are you?"
I tell them I'm not a financial advisor, but
This is what
this
I
is
would.
what you should do.
Yeah, and I tell people that too. And the drop is coming, where if they go up here, right? This is, if you take, let's do what other traders do, because long-term traders will do this. If you take the high, you take the low, we're barely breaking above halfback. So realistically, can we trade above these highs? Yes, because
Yeah.
possibly do this. And let's see where we could trade at, right? Look where we could go. Oh my God. Between this area that I have here circled. Now, the down scenario is that once it gets up there, the Feds are going to pivot. And guess what the market is going to do? They're going to be like, okay, we'll let the market drop. Why? Because long term, when they pivot, they're not going to reduce interest rates. They're just going to stop increasing interest rates.
Uh-huh.
That doesn't mean that inflation is going to go away.
No.
It just means that they have to stop, because banks are going to fail. More banks will fail. And the point of that is that all this borrowing that they do is made up money, and they pay with people's money that they deposit. And I'm not talking about our money. I'm talking about millionaires' money. And when these millionaires start withdrawing money from their banks, that's going to be an issue for these banks as well.
Yes, that's a
So
problem.
that's why they will pivot, because they're already seeing the scenarios of this happening. Now, as they pivot, they'll reduce this down to a point where everything will become cheaper. So, when the market drops, then the Feds are allowed to stimulate the market, so the market could be held up, just like the banks. So when the market actually drops, just how it dropped here, and they're like, oh my God, the banks are failing, we have to give them money. That's the scenario. That once this drops, and they're only thinking about the banks right now. So once this goes up to where they want to sell it, and they sell it, and the Feds are like, yo, we're pivoting, this is gonna tank. And once this tanks, then the Feds have to literally stimulate the market again. And guess where
And
they'll
that's
stimulate?
when the dead cap bounce will happen.
Yeah, and
The
that's
market
when,
will start steadily going up.
yeah, it'll bounce, it'll steadily go up, they'll stop stimulating again, and they'll come down again to another price. And then when they're done with this whole stimulating, and they see that the financials are failing too much, and we're somewhere at the lows, and people aren't buying, and inflation is kind of under control, because people are actually losing their jobs, then
They'll start
they'll
dropping
start
interest rates.
dropping the interest rate.
Yep.
So once they drop the interest rates, that's when they'll be like, oh, we're in a recession. They'll say we're in a recession, because they'll tell you after the fact. Because when we're in a recession, it's really an open market to invest.
Yep.
Because once we get down to the lows and to a
Which I
price
think
where
we could get back to 3,000. I mean,
we could get back to
personally,
this
I'm
right
still
there.
thinking that.
We could get back to this.
I've not lost it yet. I think we have to test it from the top side, because it was never tested.
I mean, if you really
So-
take like where we were from like Trump stage, I think Trump was what, a couple years ago.
Probably 3 years.
Yeah, it was.
Yeah, 3 years.
We're probably
Yeah,
gonna
there's
get.
COVID drop right
We're
there.
probably getting to this high right here. To like we say before, like look, the
Around
market recovered.
33, 3,000 to 33, I think we can dip into.
Yeah, like 3,400, 30. That area is still area we could
It's
go.
yeah.
And
But
the
that
reason,
3,000 was never tested from the top side.
yeah,
We
I mean,
do know 3,000 has to be tested. It has to.
yeah. So it has the scenario of doing this, but I think they sell the highs and we could still squeeze to the highs. I don't really think that this is a recovery because everything is gonna become worse as time goes. Remember, they're weighing in a long-term projection. Right now, it isn't affecting the market. Right now, it's not affecting the market. The only thing that's affecting the market is the fact that they're still raising interest rates. Once they stop raising interest rates, then we see the outcome of it. The outcome of it is when they say, "Hey, we're stop raising interest rates," the market will come down. Now, will it come down as fast as I projected there? I don't know, but it is going to come down. We will see it come down, and once it starts coming down, and it starts going all the way where the market is now lower, unemployment's higher, and inflation's kind of under control, the Feds will start stimulating the market again. Because without Feds stimulating the market will be literally at these lows, at this area right here. And they started stimulating the market since, since the housing crisis.
Yeah.
And they haven't stopped. They haven't got that under control. And then you had the trade war with China, and that kind of, they started reducing that during the trade war, which with China, from the housing market, which is literally around this time. This is the time that they stopped doing right here. So around this time they were still stimulating because of the housing market. And then it started doing this, like it was pulling back, right? And then you had Trump come into election, I think 16, right? Around 16 or so. And this was the trade war, which was an outrageous run, the trade war. Yeah.
Well, I think they knew what was coming. That's the reason why they ran it up.
Well, the trade war caused this, Doc. This was Trump right here. This is Trump's era. Like you could literally break it down from eras because of the trade war. Remember, we were really tariffs on them and everything, and we had our imports and everything. He said, "I'm gonna stop" and everything. Um, it was actually the Feds had to act with it and start and literally start buying up the market again. And these were actually profit taking until December. Obviously, they did,
Yep.
Santa rally, and look how big that Santa rally was.
Yeah.
And then we went. Remember, we brought 3,000. Then we went above the like 3,000. I think this era. This isn't. This isn't. This is actually the tariff war right here. This drop. This is the tariffs right here. This is Trump's election right here. This is the part where he was like, "Oh, China's that taxes and stuff, the trade agreement," and then after that, it was the run up. It was stimulation, stimulation, stimulation. Biden, and then boom, COVID. COVID hit March right here, and they
We
were
had
ahead of the
COVID, we
game,
had COVID in Trump though.
huh? Yeah,
We had,
this is the back end of it right here.
yeah, COVID happened in Trump era.
It was February
Because Trump
2020.
got COVID and the market tanked.
Yeah, well, the market was bound to tank. This is stimulation from that, and then stimulation from tariffs, and then boom, COVID hit, which is kind of weird. China here, right? China here, huh? And then we had the one of the biggest bull markets ever since that drop. This is the biggest bull market ever. This is literally an outrageous, almost 200, almost 2,000 points to the high side, Dobbs.
Yeah.
This was
Well, because I
33.
think it was that same scenario that we know now. They're just trying to get the price as high as they can go because they know what's coming.
Well, right now, yeah, that interest rate, and this is no interest rate, so they were running wild. This
Yeah,
Dobbs.
they just let them run. They just
Yeah,
squeezing shorts. That's all they did right on that whole run. Is all they did was squeeze out shorts
and
the
like I
whole
said,
run up.
if you learn this strategy, this is easy. This is
Yep.
actually very easy, and it goes into the end of the months, and they sell off, and then they buy at the lows. They go to the end of the month, right? and then they literally go into end
And
of
we're
month
at
and
half
sell
back.
off.
Yep.
And they go to end of month, and wherever it's at, if it's at the lows, they buy it or sell it off.
Freaking halfbacks, man, all day long.
You can see it. High.
Look, I mean, if you can't see that, man, high-low halfbacks all day long.
Even like this is kind of a scenario
which
we're
is
going
crazy.
through. Let's see. This is kind of a scenario we're doing right now. Look, no halfbacks tested. So that's why I say, can we literally continue? Look, can we continue to go up? Yes.
Yeah.
But we did test the halfback here. So I mean, this is 1, 2, 3, 4, 5. Well, this one tested this halfback. 5. Well, this one tested 2. This one tested. See, we have 3 days like this. It's kind of the same scenario we're doing right now. And these are gaps.
But what does it do though? I mean, it finally comes back and tested.
Yeah, it tested a lot of them.
Yep. Because you got low, high, and it's halfback.
Yeah.
It's
Never
all in
tested
the
that
disguise. That's why we look left.
Never test that.
Exactly why we look left.
High, low, halfback right here takes out that high. Now it comes back and tests halfback right here. Comes back, tests that halfback. Does it have to come down instantly? Look at this candle.
High, low, it's halfback.
And this candle right here is kind of the scenarios of not testing halfback. But we had like 3 days that 3 or 4 days, no halfback. Look, this no halfback, no halfback, no halfback.
But we did have a sell off. Did we get 2 days of sell off? We only had 1 day sell off.
Yeah, 1 day sell off day. That's it. So the scenario at the highs can't always be that this is a sell.
No.
See how we went up, came back, and then we held that high is very important because we could trade
line.
Yeah, we could trade above those highs. Let's see where we're at right now. Above Stingham line hard.
Yes.
And the highs. Is it the same scenario? I don't think so, but
no.
I mean, right now, look what halfback we are holding. We're holding this halfback. So high, low, halfback. We're holding
that one right there is the key. So is that our new low?
That's the problem.
Is that our new low? 32, 33-ish.
See how we closed above it? Now
scenario. Oh, they ended up closing above it?
Yeah.
Damn.
Can they boost it up? Yeah, they could still boost this up. This could still be.
Yeah. They can get up here to this second wick right here. I love hitting that second wick. Look how that lines up to this right here.
Let's think about the scenario too. Held halfback, where could we possibly go?
Halfback to halfback.
Right there.
50 to 50. Y'all hear me say it all the time in the room. 50 to 50. 50 hoes, we going to 50.
I think I called that early in the day that I was like, we could possibly, if we break out, we could possibly go to these highs. Because we're at the highs doesn't necessarily mean it's a sell. Now, what they did take profit. But the fact that we're above this low.
Well, think about it. Look how many days run we have. Would you take profit?
Yeah, you got to take
profit. Take a little bit, right? They're taking a little bit and they're leaving a runner. That's what we do, right?
Yeah. I mean, right now, the scenarios we're above this low. Why would we come down this halfback? And we're closed above it. And we're above this halfback. So if we're holding here, can we possibly go up here? The key is going to be this 42. If we start trading above 42, you better believe that this high is probably not going to hold. Now, can we do that 10? I'm not sure if we go to that 10 to this halfback.
Yeah, may not. Looks like they're on a mission. They're trying to get somewhere fast.
They have time, though. That's the thing. They have some time to get up there. So can we roll down? Yes. But going into this end of the week, and everybody's very short bias, and the fact that, put it this way, tomorrow's Wednesday and Friday's a holiday. If tomorrow we're not below 42, it's not going to that halfback. We're possibly going to start trading up here. And then possibly by end of the week, go up here and possibly then sell off to take a breather. But the thing is that earnings starts next week, and this could literally continue to go up because of that. And the banks are first to report. So any pullback, I think, is being met with buyers. That's the only problem with this. Any pullback is met with buyers. Today should have been a big sell-off day. Yet we're about to go right back up almost to 40 from a sell-off that wasn't really that much of a sell-off from yesterday. I mean, the close of yesterday was what, 40, 50 ish area.
Maybe.
Hey, we're only down 30 points. We'll see what happens. Anyway, we'll keep it posted. We'll see what it is.
That is true. Staying trading, knowing where price is headed is our edge. We know how the market moves. If you don't believe us, come join us and we'll show you. Yeah, we got to do the risk disclaimers. The risk of loss in trading securities, options, futures, forex, and commodities and stocks can be substantial and not suitable for all investors. You must consider all relevant risk factors, including your own personal financial situation, before trading. Do not use money you cannot afford to lose, guys. That's why we use prop firms, and everybody's running specials. Easter specials. So with that being said, we'll see you on the other side.
Cause so many time passed by. Don't know why I'm losing my mind. Ego was so strong inside. At this point I just lived a lie. I just lived a lie.
Area 51.
Wish I could tell you why. Wish I could feel you again, but I know it's too late, and I know you're away. There's a chance to apologize. Nah, nah, nah. It's a goodbye, just a goodbye. Forever and ever, you never come back. Just a goodbye, forever goodbye. I sit in my ride, thinking about you. Drive through the night, I got nothing to lose. Strobe city lights, they can tell me the truth. Tell me what I should do, I got nothing to lose. I got nothing to lose, thinking about you. Drive through the night, I got nothing to lose.
The other
Strobe city lights, they can tell me the truth. I got nothing to lose. I sit in my so many time passed by. I saw you last time. This is my last ride. I wish we're gonna see us on the other side.